Hey guys, I hope you're doing alright. This is going to be the first video of the intermediate guide and it's going to be all about breaker blocks, okay? So I'm just going to run through a quick example with you and then we'll hop into the charts. Alright, so let me set the scene for you. Price delivers to the upside. Alright, let's say we tap into a PD array. Now, once price shifts structure off this PD array, we can see that this order block here has failed. Alright, this failed order block becomes our breaker. And we can use this as an entry point as all these long orders are trapped here and price tends to trade back into this level to allow those orders to liquidate. All right, now after that we should see a reaction off of it. Now if you combine this breaker theory with an FVG in this leg, that becomes a unicorn setup and it's super high probability. All right, that's enough talking. Let's get into the charts. Okay, I've got a pretty crazy example here for you guys. This is going to be two trades back to back using breaker blocks. Now, I don't expect you guys to know what a lot of these terms are, but you will eventually as the course progresses. But for now, just focus on the breaker blocks, okay? So my analysis here, we have this 1 hour SIBI getting respected, okay? Now we shift structure off this SIBI, trading through that low of the dealing range. All right, this confirms my overall bearish bias. I will get into that in a second. All right, hopping into the 15-minute chart, we leave this supply zone after tapping into that 1 hour SIBI. All right, price accumulates, then manipulates into that. We come down. We leave a 5-minute balanced price range after tapping into this supply zone. Again, we get that accumulation, manipulation into that PD array. We come down straight through this 1 hour order block. All right, I'm just going to go back a little here. Okay, so this 1 hour order block that got traded through is going to be our breaker, is our main point of interest. So I mark it as BRK and a minus symbol as it's bearish. Okay, now because price traded through this order block, I'm expecting it to return to it to allow these long orders to liquidate. All right, now price comes down, taps into this 5-minute order block, this bullish order block. All right, and what did we leave behind? Another bearish order block here. Okay, so price comes up. And as soon as we break through this order block with the candle body, this is going to be our 5-minute bullish breaker block. Okay, and we can use this breaker block to deliver us to this 1 hour breaker that we've marked here. All right, I like to keep a tight stop because I'm ambitious, but you don't have to. All right, this is going to be a 4R trade. We get tapped in nicely here. It's delivered straight to this 1 hour breaker. Now, because we're overall short biased, we can take a short directly off this. Okay, and we're going to target this opposing liquidity. Just bring this over here. Okay, so we're in short at the moment and delivered brilliantly. All right, so what I want you to take away from this is breaker blocks are super high probability after we tap into a PD array. All right, we can use them to deliver to PD arrays. We can use them to deliver from PD arrays. We can use them in a lot of different ways, all right? And they appear on every single time frame. So as you can see here, look at this, 2 back-to-back trades using breakers. I'll show you guys one more example. Holy fuck. One more example, okay? Okay, this is going to be another example. This happened a few days before the previous 2 examples, just to give you an idea of how frequent these breaker block setups occur. All right, so on the daily chart, we come down, we sweep this daily low, tapping into that new day opening gap over here. This is going to be our stop hunt. All right. Now we hop into the 5 minute chart here. This order block that delivered us to the stop hunt gets traded through with a fair value gap. All right. This is going to be a unicorn setup. Super high probability. So we can take the trade off this tight stop because I'm ambitious. And we're going to target this internal range liquidity. Okay. So let price play out here. Tapped in there. Price chopping around a bit. And there you go. Delivered 3.75R. Okay. So I'll just give you guys another little hint while I'm at it. All right. We don't want to target this strong high of our dealing range. All right. And the reason for that is because we're overall bearish biased. And if we have a bearish bias, we anticipate these strong highs to hold. Okay, so it's best to target internal range liquidity. But yeah, I hope you guys enjoyed the intermediate guide episode on breaker blocks. All right, catch you guys in the next one.